Good evening, everyone. This is Divya Jain from BioAngels, and we welcome you to the Biotech and Health Tech Angel Investment Masterclass. This is a series of masterclasses by industry leaders to help you learn and understand from their experiences various aspects of angel investing in biotech and health tech sectors. These sessions will help you to speed up on the dynamics of the angel investing ecosystem and emerging practices with the help of trusted experts and curated content as you take the plunge into the world of investment. To introduce you with BioAngels, it is a unique partnership between BIRAC, an enterprise of Department of Biotechnology, and Indian Angel Network, which is India's single largest horizontal platform for seed and early stage investing. It is India's first, BioAngels is actually India's first sector focused angel investor group in biotech, health tech, medtech, pharma, clean tech, and agri tech that brings money, mentoring, and market access, echoing ION's genetics. It brings a heady mix of private investor groups driving the investment process along with access to domain and tech experts embedded in the government ecosystem through BIRAC. Through this masterclass, we also invite investors to join BioAngels and discover and get early access to a pool of high potential startups in these sectors which are witnessing exponential growth. Moving on to today's topic, a VC perspective, experience and case studies of investing in healthcare and life sciences startups. The past 3 years have seen a boom in VC funding in the biotech sector. Research showed that biotech companies raised more than $34 billion globally in 2021, more than doubling the 2020 total of $16 billion. The exuberance of these seasoned early stage investors signals that they see the potential for significant breakthroughs in how drugs are discovered, targeted, and delivered. Let's get into the nitty gritty of risks, timelines, overall probability of success in this space. Today, we have with us a seasoned investor who has been actively investing in biotech and health tech space and will be sharing his experiences with us. Today, we are joined by Mr. Sameer Wagle. Sameer Wagle has over 26 years of VC and operating experience in India and Southeast Asia. He's currently managing director at Asian Healthcare Fund, a private fund focused on investing in healthcare and healthcare related areas. Before joining AHF, Sameer was executive director at Nomura Securities, where he headed the Indian activities for the firm's private equity division. Prior to Nomura, Sameer's experience includes being a partner at IL and FS Investment Managers, a 5+ year stint in Singapore in the VC space, primarily with Vertex Management, which is a part of the Singapore Technologies Stemsec Group, and being a part of early team at GVFL Limited, one of the first Indian venture capital firms. In his personal capacity, Sameer has been associated with Avishkar, India's first social venture capital firm, and Takshila Institution, an India-focused think tank focused on public policy. Thank you, sir, for joining us. We are requesting our audience to also write down their questions in the chat box, and we'll take them up towards the end of the session. Over to you, sir.
Thank you, Divya. I'll share my screen. I hope you can see the screen now.
Yes, sir, it is visible.
Okay. So, good evening, everyone. This is Sameer Wagle here. I'm going to spend the next 20 minutes, 25 minutes talking about healthcare investing in India and some case studies of what I've done in my past career. And after that, we'll be happy to take questions or clarifications. India is growth in India. The bioeconomy is a huge growth area. I think this is something which all of us on this call know, so I'll not really spend too much time. I think the bottom line is only that over the next 5, 10, 15 years, the bioeconomy in India is likely to grow hugely. And therefore, as potential investors in this space, we should try to benefit from this growth wave. And these are some of the trends, factors, which is leading to the growth in the sector. Anyway, that's so straight to the presentation. And I will start with some rudimentary things. Some of you who may be new to the sector and new to investing. So essentially, there are three buckets of investors when one looks at investing in a particular sector. There are lenders, there are strategic investors, and then third is private equity, which is essentially angel investors, venture capital, and private equity. So lenders obviously look for fixed returns, collateral to secure their principal. Strategic investors look for investing not only for financial returns, but also for business synergies to get business benefits from the investment they do. So these are two different buckets from the main bucket of private equity. Now, private equity are investors who invest in growth stage startup companies where they are taking the risk of investing in relatively young, immature companies in return for potential benefits by when these companies grow and make returns through equity appreciation. And there is a very strong fiduciary relationship between the investor and the company in this. So the reality of, and for the rest of the presentation, I'll focus more on angel and venture capital. So venture capital is where you are helping build businesses with equity, quasi-equity investments, and where there is significant knowledge, expertise, vision, which is brought to the table. Venture capital is not passive investment. It is not a kind of debt investment to first generation entrepreneurs. It is investing in people and not just innovations. And venture capital investment succeed if the underlying investment business succeeds. I'm down with the bad cold. What VC look for in an investment is the following factors: team, product or service, market, business model, and capital requirements. And I'll spend time on each of this. So team, what is important is that it should be a strong execution-based team. So idea can be good, but if the team is not able to execute well, then the ideas will not succeed. And therefore, the key qualities that one looks at in the investing is track record, complementary skill sets, persistence, integrity of people, and also the desire to reach aspirational goals, not incremental goals. What is the organization chart? So it is not normally a one-man show. There is a bunch of people who build a business. What is the ownership and stock option plan? Second is product or service. How important is the business problem? So the saying goes that you would want to invest in a painkiller, not in a vitamin, because painkillers really take care of your pain points. It's not something which is just good to have. It is something which is essential to have. And customer validation is key, where you are able to speak to customers, get feedback from the customers, and get validation that there is a strong requirement for the product or service. It should have a distinct or significant advantage over the competition within the targeted marketplace. There should be a sustainable competitive edge. There should be a product, process, or technology which is unique, which can be patented, which has intellectual property. So that's the product. The market is where there is a large market size, both domestic and global. There are strong growth drivers. So this is a market which is growing quite fast. Maybe a growth rate of at least 30-35%, if not more, per year. There is a innovation which is discontinuous, creating markets that did not exist before. And there are validation in terms of companies being acquired, which reflects the value of the business. Who are the competitors? What is the differentiation in product offering, pricing, or differentiation? So what is the time to market? First mover advantage. And what is the time to market of the innovations? Give me a minute, please. Sorry. So the market has the competitors, the product positioning and competitiveness. What is the differentiation with respect to the product offering, the pricing, and the distribution? The time to market, are you able to reach the market faster than similar companies which are in the market? And whether the time to market is so long that other people can come and reach the market before you. What is the business model? Is there a high revenue growth rate? What is the sales cycle? In very many cases, the funding needs are quite critical to meet, because if the the funding is not sufficient for the time period in which the customer buys the product and money comes back to you. So the sales cycle has to be very efficient. What is the sustainability to reach a critical mass? So it's not sufficient if you are only able to reach minimal size of the market. It has to be a mass market where you can create critical growth, critical revenue base, and profitability. What is the cost of sales acquisition? What is the marketing and distribution strategy? And what is the competitive strategy and differentiation? And what are the foreseeable exits? This is the investment process, from preliminary evaluation to negotiation, deal screening. This is what someone like BioAngels will follow, where you start with preliminary evaluation, there is negotiation, deal screening, approval. There's typically a third-party committee which will approve the investment. There is a term sheet, there is due diligence, and then there is post-investment monitoring. These are the post. So it is equally important to play an important role post the investment, and this is done through multiple ways in terms of a board seat, in terms of business development, in terms of acting as a mentor to senior management. Uh, and interaction through uh, regular board attendance, monthly financials, quarterly strategic review, and there are various aspects of value addition that one would do. And I will spend a couple of minutes talking about some specific studies. So the case study, I am taking the case study for some of AHF portfolio companies. AHF is the healthcare focused private equity fund that I work with. So there is Forus Health, which is the first case study. It's a very innovative medical devices company focused on ophthalmic screening devices. And we invested in the company a few years back, and the company has grown from a portfolio of one product to today a portfolio of multiple devices with 3,100 installations globally, and provides is present in 50 plus countries globally. Has consulted 700,000 remote diagnosis. It has 5 US patents, 1 Indian patent, and it is backed by Excel Partners, NewQuest, Team Fund, besides AHF. This is the presence of the company. They are running today possibly one of the largest teleophthalmology networks in Asia, in the state of Andhra Pradesh, across 115 centers, where they have served close to 1.5 million people in just 20 months of implementation. The other company is Ben Franklin, which is optical retail chain which operates out of eye hospitals and ophthalmology clinics. It's a very unique model where the company operates in a shop-in-shop model with sharing the revenues with the doctors, and in return providing optical retail products to the customers who are coming to the eye hospital or ophthalmology clinics. Today there are over 400 stores across 226 cities, and has very strong unit economics. It has recently pivoted into providing B2B products to services and products to mom and pop opticians across different cities in India. Subdentist is the third company that I will speak about. It's one of India's largest dental clinic chains with 105 clinics and 400 doctors, has treated 1.5 million patients. It follows an extremely differentiated capital light model, providing best in class, affordable dentistry to the mass market. Is recently got into aligners, which is a dental replacement for braces, and is selling almost 1,000 aligners per month. This is the value addition that we have done, helping companies in different ways, whether it is business development or contract negotiation or new growth strategies, helping in optimizing the sales strategy and so on. Seema, these are the learnings from healthcare investing. Challenges on the ground execution. There are challenges both within the company and external. There is a potential conflict between profitability and social good. Managing medical talent is always a challenge. Ethical issues in healthcare are very important because ultimately healthcare is for the benefit of the patient. So you need to make sure that there is no conflict between profitability and care of patients. Gestation period for healthcare is very long, typically as compared to other fintech, edutech investments. Healthcare investments are much longer time. Funding availability over the life cycle is a constraint. In India, the capital for biotech healthcare is limited. What is the size of business? Exit challenges. There is, to take a company to IPO in the healthcare space is relatively more difficult because the companies grow at a much more reasonable pace. And last is valuations. Valuations always tend to be a challenge. Concluding slide is about the different trends. I think we are aware of all these, including dependent on healthcare, disintermediation, specialty healthcare delivery, digitalization, and formalization and consolidation. So that's what I wanted to cover. My apologies, I just came down with a cold yesterday and somehow today it seems to be far worse. So my apologies for this quality of the speaking, but happy to take any questions. Yeah.
Hi, thank you so much, sir, for this session and navigating us through your experiences. From the audience, if you have any questions, please do write to us in the chat box or in the Q&A box, and we'll be happy to take them up with Sameer, sir. So we have a few questions. How do you see the future of health and wellness tourism in India?
I think it's a huge opportunity. So medical tourism, I would classify in two forms. One is domestic medical tourism. Second is international medical tourism. I think both there is a large potential, and especially for the international domestic medical tourism, because India has emerged as a hub for patients coming from not only neighboring South Asian countries, but also Africa, Eastern Europe. And the good news for any entrepreneur who is focused on this sector is that there is no market leader as such. Therefore, it's a large opportunity. I think the main criteria for success in this space is going to be the ability to execute well. It's essentially a kind of KPO model in a more specialized manner, and the potential is quite large.
Great. We have one question from Anil. Was your investment in Forus an angel investment or late stage investment?
It wasn't an angel investment. AHF is not an angel fund. AHF is a venture capital fund, but it was a Series B investment. So I would call it as a early growth stage investment.
So for everybody, if you want to invest in early stage startups, BioAngels is the platform. We look at investments ranging from 25 lakhs to up to 10 CR. And our sweet spot lies somewhere between 3 to 5 CR. So if you want to invest in biotech, healthcare, pharma, agri-tech related startups, you can reach out to us, become a member with us, and explore the platform and various investment opportunities. Next question is, are we going to invest directly into the companies, or does it always have to go through with BioAngels? If you become a member of BioAngels, then of course, you'll have to invest through BioAngels. But if you are not a member of BioAngels, I think you can. There are a lot of startups in the ecosystem who are looking to raise funds. You can get access to them directly and invest directly without any platforms.
I think there is a question if the product is more of indigenous cost-effective models where MNCs are current players. How does the VC view such projects for funding? I think certainly it's an area that would be of interest for VCs. BIRAC, for example, BIRAC is one of the partners in BioAngels, has done a stellar role in incubating and providing grants to a lot of this innovation in indigenous medtech models. And now there are funds which are also focusing on this. So certainly this would be an area of interest.
Great. We are a small stage startup with a product in the MVP stage, looking out for validation of the product. What should our next step be? We have done our product research with family and friends for usability and accuracy and have not got good feedback for the same.
So I think you should approach some of the angel funds. So, I mean, the first option should be if you can fund your own resources, take it to a certain stage, and then bring it to an angel network. Because if the initial development doesn't take that much capital, then probably use your own resources as much as possible. Then come to angel networks like BioAngels, Indian Angel Network, Kiritsu, etc. And then many of them would be interested in that.
Next question is, how can fundraising in circuit board manufacturing?
Sorry, I'm not clear about that question. If you're circuit board, as in maybe the gentleman can clarify what he means by this.
Kamlesh, if you could just elaborate upon your question, that would be great. But we have one question from Madiha. Would it be possible to get in touch with Sir about specific startups and how to assess them as an investor? If yes, what would be the best way to contact him?
Yeah, you can share my email. Happy to.
Sure, I'll do that.
He says it's a startup. So, circuit board manufacturing startup. I'm not sure if BioAngels would look at circuit board manufacturing. BioAngels is focused on biotech, healthcare, agri-tech, and so on. But I'm sure there are, if it's a Me Too kind of business, then it might be more difficult. But otherwise, there are angel networks which are more generic, including Indian Angel Network and others. So maybe you can try approaching them. But BioAngels, I think, will not do a circuit board manufacturing, which is electronic business.
Right. Next question is, how do you see health data valuation? Any methods you have seen working and challenges for companies working in this space?
There is health tech in general, and health data companies in specific are businesses which have a very bright future, thanks to all the developments in the public data infrastructure which has happened. But valuations, I think, will be very company specific. I don't think there is a generic rule of thumb for the space as such. So if you have any particular product or company in mind, happy to engage on that.
Great. I'm a founder of a healthcare startup. I have a novel invention for antifungal. Preclinical studies are completed. Now need to do the clinical trials. Would the investor be interested to invest? Because it will take a couple of more years to complete the clinical trials. It is patented and it is IND. Kindly reply.
So I think there are different funding sources available. BIRAC itself has multiple programs. So I don't know if you have explored those. If not, I would encourage you to go to the BIRAC website and look at the different programs. They give grants, they give loans. So that is one way. Second is, once the company or the venture reaches a certain stage, then you should reach out to angel networks like BioAngels. And yes, the angel networks do invest in companies where the development time is still a couple of years.
Right. Next question is, for an individual investor interested in angel investing in biotech, how much knowledge should an investor have in the tech and healthcare space?
I think the knowledge is available on the platform as a group. So you will have different members, different stakeholders like BIRAC and Indian Angel Network who will bring a lot of the expertise. I think what you need to bring to the table is passion, your desire to invest into biotech, healthcare startups, and the patience, the patience to stay with these investments in their growth journey.
Right, absolutely. I mean, BioAngels as a platform not only provides money and money to these startups, but also market access and mentoring. And I think it is a great platform for the investors. Even if you don't have much knowledge about the healthcare and biotech space, it would be a great learning space for you, because there would be investor who would be going through the startups, discussing, and you can actually, we host pitch sessions, so you can get on call with these startups and ask your queries. You can be a part of these discussions, which the investors who have been investing in this space, they have. So, it could be a great learning space, like Sir mentioned.
There is a question here. We have a rural.
Next question is, what is the typical ROI expected exits in life sciences, biotech, biopharma, early stage startups?
So obviously, it's a high risk investment, so your return expectation is very high. So I would say at least 30-35% IRR. But you must keep in mind that it is also quite risky. So I would say that would be the range, 30-35% IRR.
What is the scope of funding for digital health products?
Huge. I think post-COVID, digital healthcare is become mainstream. It sounds strange today, but telemedicine consultation was not even legal before COVID. Now it's mainstream. You have daily medical consultations, treatments, which happen on digital platforms. Patients have accepted it, doctors have accepted it. So I think the potential is huge. And good news is that the market leaders are still being established. So there's a huge potential for new companies in this space.
Right. Next question that we have is, what are the data regulation compliances do digital telehealth app startups have to go through?
Can you repeat that? I can't see the question for some reason. Divya, can you repeat the question?
What are the data regulation compliances digital telehealth app startups have to go through?
I don't think they're very different from the regulations that are present for data privacy for the telecom company, the digital startups in other areas. There aren't, to the best of my knowledge, any specific regulations for healthcare startups in the digital space.
Next question is, for a startup, when do you suggest to go for investment?
Oh, see, when you're raising equity, you're diluting yourself. You want to preserve maximum value with yourself as the founder. So, the best thing to do is to use as much of your resources as possible to grow the business to a certain stage, and only then look for external capital. In the interim, you can also look at non-dilutive capital like grants from BIRAC and others. But the idea would be that you reduce the dilution till a stage when the company can get a decent valuation.
Right. Most of the digital health tech startups do not have an IP. What are the key factors investors look for in those cases?
So why would they not have IP?
I think you were not audible.
Hello?
You are audible now, sir.
No, so what startups are you talking about here?
Digital health tech.
So, well, the IP can be of different types, right? IP can be either the technology or the unique proprietary algorithm that you have, or it could be the brand. So if tomorrow a particular company creates a customer brand, that becomes the IP. That becomes the entry barrier for someone who's trying to replicate that model. So IP doesn't have to be only technology. It can be customer brand. It can be the channel in which you get customers. You build a moat so that other people cannot replicate it that easily.
Right. So we have a follow-up question from Anil. You said gestation period of health tech startup is much longer. Can you tell approximately how long is it? Also, what is the success or failure rate in health tech startups compared to other sectors?
The gestation period can be as long as a decade. Company like Practo, for example, has been around now for 7-8 years. So it does take time. As far as success failure rates, I don't think there is any formal data for that. I would say it is not very different from health tech startups. as compared to others.
The sector.
And health tech startups have really taken off only in the last 6-7 years. So we are still very early in the growth journey.
Right. What is the typical industry P ratio for AI ML based software, medical devices, or medtech companies?
So I would say the better parameter to look at would be EV by sales, because most of these companies would not have profitability. So EV by sales for medtech companies can be anywhere in the range of 4x to 10x revenue. Companies which are highly profitable and do have a profit to or do have a profit to speak of, the earnings multiple can be very high. But most companies in this space are still not profitable.
What is the scope of funding for a startup which is focused for live streaming, all conferences and CME, along with social engagements of doctors under one platform?
So the question is whether this is a business model which can work, right?
So you were not audible. Sorry.
So the question is whether CME's live streaming of doctor consultation can be a business.
Fundable business, right?
Sure, there are companies which have done it. I mean, there are companies which have tried to, for example, build LinkedIn for doctors, CME platforms where the pharma companies subscribe to it. So there are companies. So it's a fundable model.
Right. One question is from Neeraj. We have a rural health tech marketplace. In 400 villages, 31,000 patients consulting, diagnostics, hospitalizations have happened in last 14 months. Being in rural, we get huge accolades and remarks that Bharat requires us, but overview is that Bharat requires VC, especially when unit model is proven and profitable, which is also appreciated, but few VCs we reached, eyeball could not stop. Any views of yours on raising pre-series A round with large investors, please?
So I would say that there are a lot of impact funds which have now come in. So perhaps my suggestion would be that talk to some of these impact funds like Avishkar or Elivar, or there are also some of these impact networks which are present. So I think I agree with you that it is not easy to get funding for healthcare services or products targeted at tier 2, tier 3 cities or rural India. But that situation is gradually changing, and there are platforms which are available. I would suggest even someone like BioAngels could be a platform you could explore for that.
Right. Neeraj, you can write to me at divya@bioangels.vc and we can probably take it forward from there. We have one question. How do you see a need of platform exclusively for doctors for continuous medical education? Basically, edutech of medical person.
Yeah, concept. I think this is something which is not audible.
Yeah, you're audible now.
So I think it's a good idea. There is the crying need. Earlier, medical education, post formal education used to be through seminars and other things, but time has become more valuable now. So using technology to use to deliver those services is something which has great potential.
Great. How would the recession in US and Europe affect the healthcare and other startup investment in India?
In general, startup investing will get impacted because liquidity will reduce. The flow of liquidity was very high for the last 3-4 years or 5 years. That has changed, so the flow of capital will reduce, but there is still a lot of dry powder. There is still a lot of investors who are looking for investing into interesting startups and ventures. So good companies will still get funded, and especially in a market like India, which is seen to be more resilient, there will be definitely interest.
Right. And we have a follow-up question for that. When will the investment get back to high levels?
That's a $1 million question. I don't think neither I nor Divya have answer to that.
We have one question. For any startup for live streaming platform, when to pitch for an investor? Once revenue model has already established, or before that, just with an idea?
See, it's a function of your own resources and how much you want to dilute. Because if you look at the journey from idea to revenue model being established, to pilot customers, to actual customers, to revenues, to profitability, the later you raise funding, the higher valuation you get. So, but at the same time, lack of funding should not deter the growth of the business. So it's a balancing act that you have to have and decide when you want to approach for funding.
Right. Any further questions? We still have 5-7 minutes left with us.
There's a question on nanotization of curcumin without any chemical modification and want to launch as also formulations of group. So what is the question? Hima, if you can just indicate what is your question. Honestly, I don't have understanding of the space, but if it's a unique product and nutraceuticals is a large growth area, so if it's a large enough category as a product by itself, then I think surely it would be interesting to a VC angel. To angel, not a VC. Yeah.
Absolutely. And if you have a product ready and some clinical trials or maybe preclinical has been done, you can reach out to us and we can have a look at it. Next question is, do you look into food and agri-tech startups as well?
Yeah, so BioAngels looks at food and agri-tech startups as well.
Yes. So we are focusing on 6 sectors, which are biotech, health tech, pharma, agri-tech, clean tech, and medtech. So investors who are interested to invest in these sectors, they can reach out to us. Startups who are raising funds, they can reach out to us with their propositions. We have one question left for Stem Cell Bank. This is, what about Stem Cell Bank? I think Raj here is trying to understand it as a market. I mean, what is the scope for funding in stem cell?
Stem cell is a business which has been there for a few years in India. Hasn't really taken off. I think it was ahead of its time. But given the increasing medical developments, I think it's something which will become mainstream, where I think in developed countries, stem cell banking is quite a mainstream activity. India, I think it will get there. So certainly an area that one should focus on.
Absolutely. We have one question: with only few lakhs to invest, how to select the angel funds?
I don't have the expertise to advise you to which angel funds to invest in. I would encourage you to become members of a angel network like BioAngels, where you get to select the startups where you should invest in. Uh, but yeah, otherwise, you should consult your financial advisor.
Do angel investors support independent clinical study phase? Up to what extent?
So the utilization of the money can be for multiple purposes. It could be clinical trials, but uh, which stage of clinical trials would depend specifically on the credibility of the team. So if a very credible team comes and even if they say we want to start with phase 1 clinical trials, then they might be able to raise funding. But if it is a relatively new team, then I think a later stage phase, later phase of clinical trials would be more fundable than the earlier stage.
Right. Hello, sir. You described the future of international medical tourism. Can you also explain the future for domestic medical tourism and also its challenges?
So, as we all know that medical infrastructure in India is quite dispersed uh, in metros. So when people in tier 2, tier 3 cities want higher end medical treatment, they need to come to some of these institutions. So there is a potential for uh, companies to act as the bridge for this, also for second opinions for chronic care or more difficult diseases. So there is a huge potential for that.
Great, great. Thank you, sir, for the session. With this, we have actually now reached the end of this engaging series. Thank you so much, sir, for joining us. We are very grateful for the time and effort you took to share your amazing perspective and experience on the topic with us. It was really an honor to host you here today.
Thank you. And again, my apologies for the cold, my coughing all the time. That's okay.
No
Thank
worries,
you.
sir. I hope you, I mean, we all of us hope that you get well soon.
Yeah.
Also, I would like to thank each and every one of you for joining us and engaging with us for this entire series. Hope you enjoyed the series and we added value to you. And we'll soon be launching another masterclass series, Angel Investment Masterclass 2.0, and we'll keep you all posted on that. Thank you so much, everybody, for joining us. And if you have any questions or queries related to investment, you can reach out to me at divya@bioangels.vc. Thank you so much.